I've summed up my 5 takeaways and thoughts about this book in this video. I highly recommend you to read the original book of the author. Please share with me your opinion about this book in the comments below. The New Case for Gold by James Rickards is a comprehensive discussion of the history, current state, and future prospects of gold as a monetary asset. The book argues that the current global financial system, based on fiat currencies, is unstable and prone to crises. Rickards asserts that historically, gold has been a more reliable store of value compared to paper money. He argues that a return to a gold standard is a viable solution to the current instability in the global financial system. The book covers a broad range of topics related to gold and its role in the global economy. Rickards begins by outlining the problems with the current fiat monetary system, including the potential for hyperinflation, currency wars, and financial crises. He suggests that a new gold-backed monetary system would promote more stability, prevent inflation, and limit government excesses. Rickards then delves into the history of gold and its role as a global currency throughout history. He explains how gold has been used as a store of value, a medium of exchange, and a unit of account since ancient times. He also discusses the role of gold in international trade and finance, including how gold was used as the foundation of the Bretton Woods monetary system, which governed the global economy from 1944 until 1971. In addition to history, Rickards also covers the current state of the gold market, including supply and demand trends, pricing, and the role of gold in financial markets. He suggests that now is a good time to invest in gold, given the current economic uncertainty and the potential for future financial crises. He also discusses the benefits of holding gold as a form of insurance against economic and financial shocks. Overall, The New Case for Gold is a well-researched and thorough exploration of gold as a monetary asset. It presents a compelling case for a return to a gold-backed monetary system and provides valuable insights into the history and current state of the gold market. Whether you are a seasoned investor or simply interested in the role of gold in the global economy, this book is a must-read. The first main point of The New Case for Gold is that the current global financial system, based on fiat currencies, is unstable and prone to crises. James Rickards argues that paper money is not a reliable store of value, as it can be printed endlessly, leading to inflation and a loss of purchasing power. Rickards suggests that fiat currencies have led to a series of financial crises, including the 2008 financial crisis, which was caused by a combination of excessive leverage, low interest rates, and unregulated financial markets. Moreover, central banks' response to the financial crisis, through quantitative easing and other measures, has led to further risks in the financial system. In contrast, Rickards argues that historically, gold has been a more reliable store of value compared to paper money. He suggests that gold has intrinsic value, as it is a scarce and tangible asset that cannot be easily duplicated. Moreover, gold has a long history of use as a store of value and as a means of exchange, which suggests that it is a more stable and trustworthy form of money than paper currencies. Therefore, the book makes a case for a return to a gold standard, arguing that a gold-backed monetary system would promote more stability and limit government excesses by imposing a hard limit on the money supply. A gold standard could also prevent inflation by ensuring that the value of money is anchored to a tangible asset. Overall, the book's first main point suggests that the current financial system is vulnerable to crises and that a return to a gold standard could provide more stability and protection from financial risks. The second main point of The New Case for Gold is that a return to a gold standard is a viable solution to the current instability in the global financial system. James Rickards argues that a new gold-backed monetary system would promote more stability, prevent inflation, and limit government excesses. Rickards suggests that a gold standard would impose discipline on governments and central banks by limiting their ability to create new money and impose budget deficits. Under a gold standard, the money supply would be linked to the supply of gold, which would prevent governments from artificially inflating the money supply and devaluing their currency. Moreover, Rickards argues that a gold standard would provide a stable foundation for international trade by creating a fixed exchange rate system. This would allow countries to trade with confidence, knowing that the value of their currency was stable and fixed relative to other currencies. This would also prevent currency wars and competitive devaluation, which can lead to economic instability and market dislocations. Overall, the book's second main point argues that a return to a gold standard could provide a more stable and predictable financial system, free from the volatility and uncertainty of fiat currencies. By limiting government and central bank excesses and establishing a fixed exchange rate system, a gold standard could promote international trade, investment, and economic growth. The third main point of the new case for gold is the historical role of gold as a global currency. James Rickards outlines the history of gold, including its use as a store of value, a medium of exchange, and a unit of account throughout history. Rickards argues that gold has been a reliable form of money since ancient times, as it is a tangible asset that cannot be duplicated easily. Moreover, gold has intrinsic value, as it is scarce and has practical uses in jewelry, technology, and other industries. Throughout history, gold has been used as a form of money, with many ancient cultures using gold coins in their trading systems. Later, gold became the foundation of the international monetary system, under the Bretton Woods Agreement of 1944. Under Bretton Woods, the US dollar was pegged to gold at a rate of $35 per ounce, and other currencies were pegged to the dollar. However, this system collapsed in 1971 when the US unilaterally ended the convertibility of dollars to gold. Rickards suggests that the history of gold as a global currency highlights its value as a reliable store of value and a medium of exchange. Gold's relative stability and predictability, compared to fiat currencies, make it an attractive asset for investors and central banks seeking to preserve wealth and promote stability. Overall, the book's third main point highlights the historical role of gold as a global currency and suggests that its unique characteristics make it a reliable and trustworthy form of money, with a long history of use in international trade and finance. The fourth main point of the new case for gold is the role of gold in international trade and finance. James Rickards suggests that central banks, governments, and individuals should hold gold as a form of insurance against economic and financial shocks. Central banks have historically held gold as a reserve asset to back their currencies and hedge against inflation or other economic upheavals. Rickards argues that this practice continues today, with many countries buying or holding gold as a strategic asset. Moreover, individuals can also hold gold as a way to protect their savings and wealth against market volatility. Gold's relative stability and low correlation to other assets make it an attractive diversification tool for investors seeking to manage risk. Rickards suggests that gold has a role in international trade by providing a common and trusted unit of account. While many currencies are used in trade, gold provides a stable foundation that can help to promote confidence and stability in the global financial system. Overall, the book's fourth main point highlights the importance of gold as a strategic asset for both central banks and individuals seeking to hedge against economic and financial shocks. By providing a trusted and stable foundation for international trade and finance, gold can promote confidence and stability in the global financial system. The fifth main point of the new case for gold is the current state of the gold market. James Rickards explores supply and demand trends, pricing, and the role of gold in financial markets. Rickards suggests that current market conditions make gold an attractive investment option. The low interest rate environment, combined with high levels of government debt and ongoing economic uncertainty, creates a favorable environment for gold prices. Moreover, Rickards argues that gold is undervalued relative to other assets, such as stocks and real estate. This creates an opportunity for investors seeking to diversify their portfolios and take advantage of the potential upside in gold prices. The book also highlights the role of gold in financial markets, particularly in times of crisis. Rickards suggests that gold can act as a safe haven asset, providing a hedge against market volatility and economic uncertainty. During times of crisis, such as the 2008 financial crisis or the COVID-19 pandemic, gold prices have tended to rise as investors seek safety and stability. Overall, the book's fifth main point suggests that current market conditions make gold an attractive investment opportunity. As a safe haven asset, gold can provide a hedge against market volatility and economic uncertainty, and its low correlation to other assets makes it an effective diversification tool in a well-balanced portfolio. Thank you for your interest in this book. Please leave your feedback on these thoughts in the comments below, or just put a like on this video. It will help me stay motivated and make more videos like this. In the description of this video, you may find links where you can purchase this book.